In this video, we're going to apply the Bitcoin CTKS model to Ethereum. The first thing that you need to understand, this was developed about half a decade ago. It was the first crypto model that actually accounted for psychology of price. Up until that point, people had been basically comparing bear market price action to bull market psychology. Now the difference is huge. And if you've seen the Wall Street cheat sheet, which is actually this thing, then you'll understand emotions and price actually move together. When everybody is panicking to the downside, they're going to be selling. When everybody is euphoric, they're going to be buying. That's not how we do things here. Using the CTKS method, we're just very focused in on structure. Now, bull market psychology is wildly different from bear market psychology. And why is that the case? For example, if you had $100,000 in here and you bought right at the top, you saw an 80% decline. By the time your $100,000 turned into $20,000, you would be pretty damn upset. And then you'd say, stuff this, I've had enough, I'm selling, and you would sell. Joining this capitulation and hammering in the bottom of the bear market. When people get wildly euphoric, as we've seen many times inside financial markets, things become absolutely irrational, but they always correct. Now, if we're going to discuss Ethereum, why the heck are we looking at Bitcoin? What has Bitcoin got to do with ETH? The answer: everything. Typically, what most people do is they don't understand the rules. They don't understand the psychology rules of price comparison. They don't understand the rules of Bitcoin leading the crypto market. They don't understand that the majority of price appreciation is literally starting to move into this consolidation period and not the bull market proper. Retail trading and investing is very, very dangerous, but there are ways that we can minimize that danger. One of the first ways that you can overcome danger is to know from a reasonable structural perspective what the bullish case is, the consolidation case, and the bearish case for any particular month. So if we look into October, we can see that the price action has just really started for Ethereum. But if we look back at these projections, which are done literally at the start of the month, and they are based on structure. They're not price estimates, they're structural estimates. Now, what does this basically mean? For example, if we look back into May's price for ETH was basically around that $1,820. But at the end of the month, we were expecting $2,730, and that is exactly where it went to, because it managed to overcome structure. And what you will find, if structure is overcome, many levels are overcome, it will just literally decay back. And we see this all the time. And we can see inside the service, these are service levels. These particular paths are discussed in each month inside the service. They do a reasonably good job of structurally estimating where ETH was going month on month on month. This is a way that you can reduce your danger, and more importantly, to learn how to do it yourself is even more important. You learn how to draw those CTKS paths in Level 2 standard certification. Now, I'll just go into the current price of ETH. ETH is currently $45.25 at the recording of this video. Now, what are the structural levels? Because remember, all of those paths are created with an understanding of structure. Now, what does it mean right here and now? Ethereum was coming up to this over bypassing the 4720, and it structurally failed. And we've seen that it's taken multiple levels of structure in order to reverse and consolidate Ethereum's price. Therefore, that 45.25, where it literally is right now, is a very important level of structure. If we can't get above and go to the 45.80 level, there is bearish momentum inside ETH's price structure. You can see that we could have a monthly forecast, and we do actually inside the service, but the monthly forecast doesn't mean much unless you get the structural passes to take it to the bullish case. If you get structural failures, it takes it to the bearish case. These dotted lines, called CTKS levels or Stanfield levels, are the most accurate support and resistance lines in existence in technical analysis. They are not drawn randomly. You'll need 2 levels of standard certification in order to draw those dashed lines. Level 1, standard certification, and also level 2. All the magic happens in level 2, including those paths. Paths are structural. They are not random, they are not guesses, they're structure. To anybody certified into the CTKS method, they know that ETH must bypass this 45-25 level in order to regain any bullish momentum. Without an understanding of structure, people could just associate any specific random level and say it's the most important level of structure in air quotes. But structure requires 2 levels of standard certification. Structure is not random, and structure gives you so much understanding of what you're looking at. Before I mentioned that 45-25 was incredibly important to keep above and to keep positive. And this brings us into the third area. For example, we've done the daily CTKS structural model. We understand what's happening there. We can do the monthly structural model, just associating these structural levels in mass to understand where the resistance is and where the support is inside the monthly structural model. But we've got to go to the long view forecast model, and I'm going to look at Bitcoin and then look at ETH for you. There's a lot more to it. We know that level 1 and level 2 standard certification are required to do the daily structural model and the monthly one. And if we don't get positive passes on the daily, it's likely that we're going to go bearish on the monthly, and that could invalidate the long view forecast model. But the causes of invalidation are really important, and they're contained within the cheat sheet. People who are expert at the CTKS method wouldn't do any trading or investing without first looking at that cheat sheet. It is literally the institutional grade edge. And the service provides all of the TradingView indicators that you see for each and every chart. There are 32 charts in there. And inside the service, I'm going to go through the Bitcoin estimates for this bull run, estimates for the bear market, estimates also for consolidation and the next bull market. It's going to be fantastic. If you're not inside the service, please pop across to ctksmethod.org. and just take it up for 1 month. It would be the best thing that you ever do. When doing a price estimate for Ethereum, a lot of people will just go to ETH's chart and analyze price action like this. This unfortunately, this is a good first step, but it won't take you where you need to go. Now, one thing that I want to draw your attention to, we've got our bullish, we've got our bearish consolidation. Bullish, bearish consolidation. Bullish. Now, when we go bearish, just understand that the consolidation period is not only increasing in terms of days, but also in terms of percentages. And look, in the 2024 halving, literally came down nearly 52% from the halving. So many people would just be piling in and saying, oh, the halving is here, everything is going to go up like a rocket, and instead ETH halved in value. ETH has been incredibly disappointing in this particular bull market. What you're going to find is you're going to get gains out of Bitcoin and out of ETH, Solana, XRP, Doge in the consolidation period post-capitulation, post-bear market. And we know that CTKS traders can make money in bear markets more easily than bull markets because of a factor of concentration. This is like science fiction to most people. You can make a lot of money in bear markets going long at spot or long under leverage if you're an expert. But the issue is you can go long and make money in bear markets, which is like literally sci-fi, but you can do it. So now we understand that ETH is just about nearing the completion of its bull run, according to ETH's chart. But ETH doesn't hold the keys to ETH's chart, Bitcoin does. Now let's get into some estimates from Fundstrat, Standard Charter, CoinCodex, VanEck, Citigroup, and Binance for potential end of year. So end of year 2025, that means December. What are we looking at here? When we look at Binance, Binance is anticipating currently 3,500 Ethereum. Citigroup, 4,500. VanEck, end of year 2025, 6,000. CoinCodex, end of year 6541. Standard Chartered, 7,500, and Fundstrat, 14,000. I will be providing my estimate in the monthly service. But not only for the bull market, also for the bear market, consolidation, and the next bull market. And I'll also do that for Bitcoin. Now, one thing that I said, we must look at Bitcoin in order to understand where ETH is going. This is a fundamental tenet of the crypto market. Just in case you thought there was a little bit of a problem with the halving, no, that's just when you go to a weekly basis or non-daily basis. If you saw it, you'll know. If you didn't see it, don't worry about it. To understand ETH, we must first look at Bitcoin's model. Now, if Bitcoin was to stop its bull market right here, we would anticipate a couple of things, and I'm going to overlay ETH and show you what they are. I have just overlaid ETH's price chart on Bitcoins, and this is something that you'll need to do as well. The alts always top after Bitcoin tops. Now, there's a specific reason why that happens. It's mainly because you get a flight to safety into Bitcoin when Bitcoin starts to level out or starts to get too overextended. The funds flow into the alts, and that's what we see all the time. There's no reason to think that it will be any different this time. So let's just go back to the 2016 halving cycle and just zoom in on this area. One thing that we notice straight off the bat is that ETH topped out after Bitcoin did. So how long was that? This is on a 3-day basis. So let's just pop in a date and price range area. And what we can see here, it was about 23 days. Now, to get exact, we would go down to the day basis, but just for now, just understand that it takes time for the alts to actually top out after Bitcoin tops out. So if you see the alts going up and Bitcoin going down, that after, of course, a fairly sustained upflow, that is your indication of a top. Let's just zoom in there and get a little bit more precise. From the top and to the top of ETH was 27 days. Going back into the Ethereum model, what we can see, 27 days previous to ETH's top, Bitcoin top. So Bitcoin top right here. You can see that ETH went up, started to consolidate, and now Bitcoin was going down when ETH exploded. This is basically just the funds flow going in another direction into the alts, and it came up literally 111%. When it hammered in the top over the next 333 days, it came down nearly 95%. Many people are always drawn to everything at the top of price action. Gold's getting pretty toppy at the moment, and a lot of people are getting called into it, and they'll potentially get very badly burnt. This is just the way financial markets work. You want to be in the market before things take off, or at least on the right side of the percentage. But you can see really clearly, this is where Bitcoin stopped, this is where ETH stopped, this was the percentage difference between them. Going forward 4 years into the 2020 halving cycle for Bitcoin, this is Bitcoin because you can notice the prices are so large comparative to ETH. We had a pi cycle cross right here. People thought it was all over, and the China miner crisis as well. Lo and behold, 27 days later, again, ETH top. One important thing to note, this didn't stop the end of the bull run. We did have quite a major retracement because the China miners went offline, China banned Bitcoin, all of that good stuff, and then we came back up. And the top of the bull market for Bitcoin was actually much later. And pretty much, even though it doesn't look like it here, when we look at a candlestick chart, Bitcoin and ETH topped out exactly the same day. No difference. This is why it's really important to get under the hood. If you're looking at a line chart, you may not have all the data. What's important here is that when we see a bit of a decline in Bitcoin, if ETH is still going, it could have a month of positive price momentum inside it. We can make a number of really important conclusions from this. In the 2016 halving cycle, when Bitcoin was on its way down, ETH went up for 27 more days. We had a pi cycle cross in the 2020 halving cycle, and that just associated with the China minor crisis. ETH went up for 27 days. Everybody thought, that's the end, all done. And then price came back, and ETH and Bitcoin topped out on the same day. No plus 27 days from there. Looking into the 2024 halving cycle, and it's really important that you look at Bitcoin first before you go to ETH. It's absolutely essential. If Bitcoin is coming up, ETH will be coming up. If Bitcoin is going down and weakening, ETH will go down, but it will weaken more. The major issue is the price always moves structurally. At least if you have your daily and your monthly structures, you have a very good perspective on where price is going. Initially, when the China minor crisis hit the crypto market, we found that 27 days after Bitcoin kind of just put in its top and the pi cycle cross occurred, Bitcoin came down, ETH went up 80.12%, and then it retraced all of those gains, plus a lot of interest. Inside the bear market, when it finally topped out, remember Bitcoin rallied again, and that brought through the rally inside of ETH. This is why you can't just look at ETH's price chart and say, I know exactly where ETH is going from ETH's price chart. You must look at Bitcoin and ETH together. And if you wanted to do this analysis on Solana, please make sure that you look at Bitcoin. If you want to do it on XRP, please make sure that you reference Bitcoin as well. It's just giving you some skills that you can apply for yourself. So we saw at the top of the bear market, down to the bottom, nearly 82% reduction. But consolidation created a near 230% increase. Well, it was above that 225, no question about it. And then the halving occurred, everything was fantastic, and we saw literally a 52% decrease in ETH. These decreases will always just shed all the retail hands out of the market. That is what they're designed to do. And when capitulation occurs, they're going to just get rid of retail en masse. So then the institutions will be buying as soon as capitulation ends, consolidation starts. This is where you want to be inside the market. Now the question is this, are we going to see a push up in Bitcoin's price and then about 27 days later, ETH will top? It realistically depends on so many different factors, and the only factor that you need to consider is structure. If ETH is failing its structural levels, it's going down, it's getting the sellers in, this means that ETH is going down. Of course, it's a very simplistic way of looking at it, but it's absolute fact. You cannot have a bull market if price is failing structurally. This is why your best friend in the whole world right now is and will always be structure. Don't randomly throw structure across your charts. Use the 2 levels of standard certification and you can draw up the best charting structure in existence. Therefore, you can see that the daily CTKS structural models are the absolute backbone of everything that you do. If you're seeing structural failures on your daily models, don't worry about your long view forecast model. It's probably going to get invalidated. Also, keep a very close eye on your monthly structural model and always know that the cheat sheet is the superpower. Right in here is the reason that things go up or down. Make sure that you're marking up your daily structure with level 1 and level 2 standard certification. Or if you want us to do it inside the service, we provide a trading view indicator across the 32 charts of the cheat sheet. And inside this month's service, and if you're not inside the service, this is the month that you really must get into it. Even if you just subscribe for a month. I'll be taking you through the rationale of what will happen with Bitcoin, all of the monthly charts across the cheat sheet, the monthly structural path view across all of that, and you'll also get the trading view levels across all of the components of the cheat sheet. If you get on the wrong side of price action, it's very easy, as you've seen, for price to come down literally 80% plus. Your key is always the same. It's always knowledge, and that knowledge comes from structure. And you can get the daily free cheat sheet from ctksmethod.org. The links are in the description. Have a great day or night ahead, my friends, and please let me know, where do you think ETH will be going to? Do you think it will be a lengthening cycle, and therefore do you think Bitcoin is lengthening as well? Really looking forward to your comments. Kate and I look forward to catching up with you again in the next video. Bye for now.